The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, nice to open on a quiet day here in the last weekend in May. And I wanted to thank everybody for joining us. And I would like to mention we're going to start off like we usually do with the German DAX, but we want to quickly move to what I think is really important. You can see the DAX had a Gartley, is now selling off. The next we're going to look at is the FTSE. We made a new high by a slightly smaller time frame, about 100 points in the FTSE, and then we reversed. But folks, the real action is happening in the bond market, and it's not just in the U.S., it is everywhere. I want to give you a 2 cents worth. Now, this is my 2 cents worth. This is what I'm going to do here is and believe me, this is my opinion, and I'm just a chartist. I don't know diddly squat about any of the things that we're looking at here as far as the fundamentals. But this is the German bond. That's the equivalent to their 30-year bond over there in Deutschland, over in Germany. And as you can see, what's happened, it's had a monster move, and it's had a monster move the last 3 days. As you can see on this daily chart, you know, the 30-year bond has made a 78% retracement of the April high. You can see what the German bond has done. That's not the whole story, folks. What you have to do is to go in and take a look at it on a little closer time frame and look at it on a 4-hour chart. You're going to see a panic that we haven't seen in a long time in the German bond market. Now, this is over the last 5 months. You'll notice that this ABCD pattern that we're looking at went up to the 164 level. That's what we hit. We've reversed that a little bit so far this morning. But it's very important to realize that, you know, the interest rate market has been very bearish for a long period of time. And what we're looking at here is nothing more than a market that is having a very strong rally, in a bear market. Now, if we take that same chart of the German bond and just move it back 1 year back into last June, you're going to see a totally different picture. What you're seeing today is nothing more than 3 lower highs, as you can see, the one in September of last year. Then we had another one, of course, in September of this year. And then we just had this monster high. Now, whether that's going to mean a higher, we're going to continue to go higher. But this is the most emotionalism we've had in the German bond. And also, our 30-year bond, it went from 41 to 46. The 78% retracement in the 30-year bond last night was at 145.28, and we hit 146.01, I believe. And so the market is still down. This has been a short-term bear market rally, as near as I can tell. And I'll mention this because I do watch, the open interest in these things. And here's what I'd like to show you. This is from the chart at the Chicago Mercantile Exchange. You just go to CME, click on data, open interest, and you'll go down to see where it says 10-year note. Right there it says 10-year note futures. It shows the volume. The open interest is 4,131,000. And you'll notice that on the far right, the open interest dropped. And look at the open interest dropped on the notes. It dropped 2.29. But anyway, when markets go up, like we saw these markets go straight up in the notes and the bonds, and the open interest drops, that's not a good sign, boys and girls. That's sign there's no boys and girls. There's no people coming in that are actually buying this stuff, and that's not a good thing. We saw the same thing happen in the gold market the last couple of days when we seemed like we were getting strong in the gold market. If we did the same thing and went to the open interest, you'll see there's the gold futures, And you'll see the open interest, 531,000 contracts. And you see the open interest drop 17,559 when we hit 1307. That is short covering. That is not new buying. There's no new players coming into the market. And that makes for a bad situation. Part of the problem is in the banking sector because of what's happening in Italy. I'm not sure what it is, but you can't trust the Italians, and I happen to be one. Let's take a quick look here. This is Deutsche Bank. We've been looking at this for a long time. Folks, it's broken under $11 in Europe, $12 in Europe today. So this market is really under a great deal of pressure. It looks more and more like Lehman Brothers, and seeing it. Someone's asking me, what are the difference between emotionalism and repricing to books based on adjustments to developments in markets? Oh, P, you're going to have to break that down in English, buddy. That's two levels over my pay grade. Don't forget, I spent 3 years in the 5th grade, so you got to go slowly. I don't understand that question. You got to break it down for me. Now, basically, the difference between fundamentals and technicals is I don't listen to the fundamentals because I don't understand them, and I have a master's degree in business and economics, and I still don't understand it. And anyway, let's move on to a couple other things. I'm a technician, folks. I just look at the bar charts. That's really what I do. I do it well. I'm not right all the time, but I'm right some of the time. And that's the key to doing these things. So we have to pay, relatively close attention to that as we're seeing. I want to spend just a second about some of the things that I see happening in the markets. I picked several stocks this week. I had about 20 of them last week that we talked about a little bit, but I want to, yes, Peter, it's breaking below $12 over in Europe, and it looks really bad. It really does. And remember, Deutsche Bank they're the largest of the people that take the counterparty risk. In other words, they take the other side of that. And what they do sometimes is they book that themselves, like a bookmaker. They think that that Cleveland's going to win the NBA, so they'll take all the action on the other side of that. But if Cleveland loses, they've lost a lot of money, and this is what the problem is. And Deutsche Bank is a very poor-run bank because you can see when the stock. I mean, in January they offered you a 35% discount to buy the stock at $20 a share. What a great deal! That was at 16. Now it's at under 12. Hello, just give me who knows what it means. We'll see what. Okay, the Deutsche Bank that loaned Trump there and just got a big promotion. Whatever that means, I don't understand that. All right, let's take a look. You want to see an amazing chart with ABCD, folks? I'm going to show you a couple of them in here just to show you what technical analysis will do for you. This is the chart of Amazon, and I want you to see the ABCD pattern that started back on April the 2nd, one day after April Fool's. It's a perfect ABCD, and I did it mathematically. In other words, if you take point B and point C and add that together and then subtract point A, that'll give you point D. The ABCD measured to 1631. The high on Amazon was 1633. Okay, that's just one. Let's take a look at Microsoft. This is even more amazing. Here's Microsoft. You're going to take a quick look at this, and you'll see here that the ABCD pattern measured to 98, 97, and so far the high in Microsoft has been 98, 98. I don't know if that means anything or not. If we take a look here at Apple, we're just going to do the same thing, and you're going to see the same beautiful symmetry. Whether it means anything or not, I'll let you be the judge. But just take a look at it. Anyway, that's what we're watching, folks. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got a call from Philadelphia. Mr. Z, are you there?
Good morning, Larry. In fact, I have to ask right off the bat, are you still in Philadelphia? Or have you traveled elsewhere?
We've traveled elsewhere, but I'm back in Philly for a day or so and then back on the road again pretty soon. But with these wild markets, who knows where I'll be tomorrow? What can I do for you, my friend?
Yes, thank you. The S&P futures, of course, have declined modestly in reaction to the panic selling over in Italy. And I wanted to ask you specifically this question. If buyers show up in the next hour or two, what is the price and pattern on that E-mini S&P above which you would say, hey, this isn't bearish, I ought to abandon the short side? That's a very specific question.
2732 in the June S&P. If we close above there, away she goes,
Okay.
And below 2695, we'll probably head down. That's we've had all these ABCD patterns complete, John. It's such perfect symmetry. I haven't seen this in many years, but of course I don't follow stocks. I did happen to do all those big ones just to see what those numbers were, but my goodness, they're spot on. And even the Dow Jones hit the exact number. I mean, within 5 Dow points, it's something that's trading at 25,000. I mean, that's 0.999. I mean, I don't know if those ABCDs mean anything, but they've certainly stopped it last week. Whether that's going to continue or not, I don't know. And this is a full moon day, and we have red everywhere. Just even gold is getting whacked, and the euro has been hit pretty hard. But the euro is very oversold and is certainly due to have some type of a rally. But these markets are very scary. And then we hear what's going on with Deutsche Bank, and then I don't even know what's going on in Italy. I just heard it off of Bloomberg, just momentarily today. But Their market was down almost 3% at one time in the stock market for Italy, but who knows? It might follow through here, it might not. But it held some pretty good support. That S&P hit the exact 382 at that 2696 this morning. The Nasdaq was actually much stronger, and the Dow Jones hit it also. So as we can hold those levels that we made last night and can rally from here, we certainly got a chance to do that. That is for sure.
Just to add to that observation of yours on the Dow Jones, matching the ABCD target almost to the point, in bisecting the United States stock market, the NASDAQ Composite Index, the New York Composite, and the S&P Cash have all done likewise. So the patterns are displaying this precision. So like you, I'm erring on the short side. And just lastly, yes, Italy's down 3% today, and of course Italy was open yesterday, and it was down 2.5%. So there's some real destruction going on over there, and of course whether it translates over here sustainably or not, I guess time will just have to tell us.
That's true. And not only that, John, we've got some pretty wild weather markets too. We had some terrible weather come in, and all November beans would make a new high by 1/4 cent. That's not very bullish action in my opinion. And also the December wheat went up and hit 588, which was the ABCD, also the 78% exact number, 588 per bushel in December wheat was the 78% level on the long-term chart. So I don't know if this is going to stop it or not, but we'll have to wait and see. But the weather is certainly bad. This is the hottest May that Indiana has ever had. My sister told me that she could never remember seeing that many 90-degree days, in a row in Indiana. But if they get a little rain, that'll help. If they don't, then these crops will start to burn up, and away they'll go to the upside.
I will, to that point, something I learned long ago from Tom O'Brien comes into play right here on those November soybean futures. Tommy had long utilized and written about and traded this concept known as going to ice, jumping a creek, building cause to take off. And that is manifest in the November soybean futures very clearly with 5 highs right around 1060 going all the way back to April 2nd. And, of course, we backed off from that as of 8:45 this morning, which tells us something. There are sellers lurking right there. If, on the other hand, price gets over that level, that would be a signal to me to just get long in a large way. But right now, just flat watching against that 1060 mark.
I agree with you on that. That's for sure. That's the safest thing to do, because usually when the market doesn't react as violently with a weathery market like this, wheat only being up a nickel, given the fact that Kansas was burning up, was really a surprise to me. But wait and let the markets tell. It's still early in the season. This is just the end of May. We got all June, July, and August to play with the weather. So a lot of things can happen between then and now. I think on any big break, if we would happen to get one, they would certainly be buyers down there. I don't know what levels yet, but if they do get down, there'll be buyers down there just because of the fact that we're going to have more than 1 or 2 weather scares this year if we're this hot in May already. We're going to have Rich Anderson on this week, and he'll be able to relay some of the information from SIME only that we look at to see what's going on. It's certainly very, very hot.
Larry, thanks so much on that E-mini S&P guidance. We'll take it from there.
All right, my friend. Thank you, and always good to see you, John. And thanks for what you do for TFNN, folks. You're really a great contributor. You should listen to what this boy says. He walks the talk. Thanks a lot, John.
Have a good day.
You bet. Okay, folks, let's move on. I want to share a chart from our good friend Tim Bost, who's on as astrologer. He sent this on to us today, and this is his summer slide, the thing that he's looking at for cycle projection with planetary dynamics. You can see it's up to date, and he's looking for the market to come in sometime around point D, and that's a very, very important astrological point right there. You see that D? that means day. And you see the B before that? That means birthday. That'll be my birthday, July 28th. Also the birthday of none other than Ralph Elliott. That Ralph Nelson Elliott. He was also born there. Elliott Wave guy, same day. Anyway, that's what he's looking at. It's very similar to the one we've seen with Bill Meridian, which is interesting too. So we'll watch that. And maybe it may not work. I don't know, but that's what's looking at. Here's one I wanted to show you too, folks. This is the Bradley model. I haven't looked at this thing in a long time because it hasn't been working. Someone asked me to take a look at it. So I brought it up just to look at it. But the key here, there's a lot of stuff here. I just put the turning dates here. You know, some of them work pretty good. You know, some of them don't. But look where we are right now. We're right over the top here. Turning date here for May, but look at the perfect A, B, C, D in the Dow Jones Industrial Average. And as I mentioned earlier, that went to the 0.999% level, hit it exactly. In other words, A, B, and C, D were accurate to 0.999, and these others were doing the same thing. That's what's so amazing. I mean, there were so many of them. Amazon, Apple, you know, the whole gamula. So watch it close here, because maybe the Bradley will kick in again. Who knows? Sometimes it works, sometimes it doesn't. Be right back, folks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, Okay, folks, I wanted to bring this chart up of Stan Harley here because he says it looks like we could be coming down into June 19th for a trading cycle low. But the one he's looking for is October 18th. That's the big one. We'll have Stan on very, very shortly. So we want to be able to talk to him, of course. And someone asked a question, how far can the euro rebound from here, folks? We've had a pretty good move down. Let me just bring this up here. And I've got to do something here quickly. Just give me a second. And then you can see what the euro's doing. We got down to that area of about 115. So we want to pay relatively close attention to it, because if we get to that level, we could certainly, see it get a little bit higher, maybe up to that 116 level. We went from 116.40 all the way down to 115. So we dropped 140 points. So the 61% retracement back on that would be 80 points. So around 115.80, where we are now, is the 61% retracement of the overnight high. So it needs to get above that, because that's all we're doing now is making that little retracement back. That's basically the bottom line. So not much to go on, looking at that. So watch that. That's the main thing that I'm trying to mention to you here is really you don't have a whole lot of things to look at in the euro as we're watching that, but that's really what we're looking at here. All of my folks, something really big is happening. We got to do this. Time out. Judge's ruling. Just a second. I got to get this up here and show you. This is bad, folks. Oh boy, hold on. This is maybe it's not bad. Stop being melodramatic, Pesavento. You got more baloney than what's the name, the guy that makes the stuff. Hold on a second. I want to bring this up to you here to show it to you. Here we are. This gap down today, folks, I got to show you this. This should not have happened. With bonds going vertical to the upside, look what's happened to high-grade bonds. Let's try it again, Larry. High-yield bonds, the junk bonds, they have gapped down below that trend line, folks. They should be soaring to the upside. That's a really bad sign. This is, I think we pay very close attention to that. This is something that we need to really sort of focus on. Remember that the world that we've talked about several times before, and I'm just surprised at that thing gap down. That's what really surprises me. Oh dear, hold on a second. I've got to get this chart of the debt that I wanted to show you. This is from Merrill Lynch Bank of America. This is the combined debt of high-yield junk bonds and the loan markets. You see it's gone, straight up here, especially since 2006. It, more than tripled. Anyway, that's where the problem will come if it's in this. Will be in the bond markets, but we'll see whether it's going to mean very much or not. But I have to turn the beeper off on this puppy, otherwise it is going to beep forever and ever and never come back again. So give me a second here to turn it off, and we should be okay. But it shouldn't have gapped down like that. And folks, I don't know anything about the index itself. All I'm doing is looking at the chart. I know it represents junk bonds, and it did gap down. I'm going to bring this up so you can see it. I'll blow it up here so you can see it. This is something that should not have happened if the bond market went ballistic. So that could be an emotional thing you got to pay attention to. But we did gap down. That's a bad sign. Maybe return and go back up again. I don't know, but keep an eye on it, because that could affect just about everything that we're looking at here. So that's really about all I can say, and move on to the next one here. Anyway, that did happen. The crude oil. We stopped on the crude oil exactly on the way down. We stopped exactly at the 61% retracement at the 65.80, I believe, was the exact number. If I can get this up here and we can take a quick look at it here. Oh dear, where is it? Just a second here. Let me get it here and we'll get it up here. We'll be able to take a quick look at it. Here we go. This is as of Friday, and we've had a pretty good rally. We rallied $2 a barrel. We got down to the exact low down there was 65.98. You see the last support for crude oil. That's what we were looking for. It hit it exactly. And now we're trading it. We got up to 67.35 this morning. We're trading around 67.05 now. So whether that means anything or not, we're just going to have to wait and see. But, we did have that big 3-drive pattern in the crude oil that did. Oh, I've got to show you one more that's just absolutely amazing here. This is the IWM. the ABCD and the IWM. This is the hourly chart for the Russell 2000. I want you to take a look at this because the perfect ABCD pattern measured to 163.81, and the high in the market was 163.56. That's 0.997 as being correct, and it's right exactly on the 1.27 expansion. So these numbers hit spot on. So they're worthy of our attention for sure. That's the way I can, at least how I can see it anyway, at the beginning of this. Let's take a quick look here. All of the beepers are going off here. This high-grade bond thing is still going nuts. Hold on a second. I lowered it and it's still dropping, so that's not a good sign here. That'll be interesting to see what happens here, with these. The beans are down. They're about unchanged now. The wheat is actually down on the day now after a real bullish number. I'll pull up the chart on the wheat so you can take a look at it. And remember, this is in the face of some of the most bullish stuff that we've seen since Hector was a pup. We did get up here to 588 last night. The ABC to 1.27 measured to 588 exactly. We're now trading at, we're still have a gap in there from the 577 level, but it's still early in the day. But we're on the full moon, and we know that the full moons are pretty powerful for wheat and also beans and corn. So whether that means much or not, we'll have to wait and see if it does. But there's a lot of activity going on, which was really exciting. I wanted to ask Norm Winsky if there was something going on at 4:20 in the morning New York time, because that's when the bonds made their high up there at that 146 area at the 78% level, and then broke more than two handles. And they've been up 10 days in a row. So, and stopping right at the 78% level was interesting. And also the notes went up to the 61% retracement. Fact is, they went just a tad above it during that big run, and then they went back below it very, very quickly. But we did get up above that 120.15 level, which was right at that 61% level in the notes. So we'll see if that's going to mean anything, for some of these markets, and we'll go from that level. With the fact that so many of these hit the exact ABCDs was amazing. And just look at this one. Here's another one. You talk about one of the big stocks. We looked at Amazon. Let's look at Google. You want to see a perfect number, folks? Look at the high that we made back at point A in Google. Then we make a perfect ABCD to the downside, exactly 0.998%. Then we rally to a 61% retracement back on May the 14th. That number came in at 110.78, and the high on Google, the number came in at the 618 was 111.08, and the high on Google was 110.78. That was 0.998%. And of course, it's backed off quite a bit from there. This might have be some serious stuff going on in the stock market if you believe these markets. I mean, if you believe these numbers, and some people do, some people don't. But that's what makes it go. We'll talk about Bitcoin coming back, as looks like she's headed towards Miami Beach.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to put up the chart of gold. This is a daily chart, and the old adage is there's nobody as bearish as a sold-out bull. I got out of the gold at $12.95. I bought it at $12.85. I got out of it at $12.95. It's now trading at $12.94. I'm beginning to believe that we're heading down to $1,200. I don't know why. The euro is one of the reasons, but it's very, very suspicious. Let me show you the next chart that is the one that I think will give us a little bit more information, at least on the short-term basis. This is going to be the chart of a 4-hour chart of gold, and I'm just going to relate it to what's happened as far as what's happening with the markets. Now, we rallied up to that 1307 on Friday. That was an exact 61% retracement. Notice that the 1326 was exact 382 retracement. But look what happened when we broke out in the gold. Look what happened here in gold, folks. Let me just show you the open interest. This should have really gone wacko to the upside with new buyers. Look what happened, far right, minus 17,559. That's how many contracts were liquidated. In other words, that was all short covering. That's not bullish. There's no new buyers coming into the gold as of yet. So at this point, I'm afraid that I have to say I'm going to wait a little bit on the gold market. And the way the euro is acting, I think that it's going to be a little bit longer, before we get to these levels of, what we're seeing here. Now, I wanted to bring up the chart here to update this chart here on the crude oil as of Friday. I put this one, of course, in the newsletter. You'll notice that the last support that we have here on crude is at that 1575 level. That was the exact 61% retracement. We rallied up to 67.30 last night. That was $1.30. That's the 130 harmonic number on the crude oil. If we get back below that 66 level, we're going to be looking at another couple of bucks lower. And with this big draft down 5% in 3 trading days, it's just like the euro, folks. It's saying, look, it wants to go lower. You really have to respect it. I mean, there's no other way to look at it. I mean, it's just it's screaming at you that that's what's happening. Just look at this euro here on the monthly chart here, how bad it looks after it came off of the 61% retracement up at that 125 level, and we hit 115 last night. So this wants to go lower. The question is, are we going to be able to get above this 115.80 today? Because that was nothing more than a 61% retracement of that move, and we got up to 115.85 so far. We're trading 115.73. We'll see what's going on. The Dow Jones is getting near the low of its session. If we get below that, that's not going to be a very good sign, I would think. What the problem is, we got so much red everywhere. It looks like people are taking their belts and tightening them up a bit. That's what it looks like. So pay a little bit of attention. We actually got wheat down on the day. It's actually filled that gap. Whether it turns from here or not, we'll have to wait and see. And we'll go on to the next one. We have an interesting pattern here in the Treasury bonds, because if we get down, we're trading at 144.21 in the Treasury bonds, and if we get to that 144.06 and don't rally, after being 10 days up, this could be a key reversal day. But that's still a long way in the cards. We want to watch that very, very closely. We're trading at 66.92 now. In the crude oil, so nothing really dramatic there. It needs to get below that 65.85. That's down a whole handle from where we are, so it's a long way. But we did complete a perfect ABCD in the crude oil this morning. I'll bring this up so you can have to do it quickly, because there's no other way that I can bring these up. And here we go. You'll be able to see there's the ABCD pattern that we made. Actually, there are two of them that they're 67.35 level. So far, it has held that level. And you can see that really important low down there in the crude oil at 65.75. That was the exact, 86 was the exact 61% number, and it hit 65.75. So as long as we can stay above that, we got a chance here to be in a little bit of consolidation. With that big move down, I wouldn't be expecting crude oil to make new highs. And you remember it did that in the face of rockets' red glare over Syria and Israel. So that was another reason to see that you had really bullish news, and the market did not respond to it. So all of those things make one wonder, whether this thing is going to be a, made a major top in here. And of course, we've seen this last week. We focused on it quite a bit, the fact that it was a beautiful 3 drive to a top pattern, and it made a pretty good spot. You're right, Gator. It did hit that point D spot on. So we'll see how we'll do with some of these others. Okay, another one that I wanted to bring to your attention here, if you'll give me 1 second here, I want to bring it up, is the NASDAQ Composite. Here again, I want to show you the exactness of the numbers that we've been looking at here. We'll put this up here. You'll see that the high that we made back here on May, let's try it again, May the 14th, was an exact 78.6% retracement to the exact penny, folks. The high was 7437.9, and the 78% level was 7437, exact. I mean, it was spot on. So, I mean, the one on the bottom was spot on too, and the one on the top was spot on too. So you got to pay attention to that number if you're trading the NASDAQ. So let's keep an eye on that anyway. Okay, someone's asking about the odds of a Fed hike. Folks, interest rates are going to go higher. All we're seeing now is a rally in a bear market in the bonds and the notes. I mean, we pointed out 2 weeks ago when it was trading at 41 in the bonds. I didn't think we were going to get all the way up to 46. I thought it was going to stop at 44. In fact, last night they spanked me 16 points when I thought 44 was going to be the high, but I nibbled at it again. However, keep in mind that you're going to lose a lot of times when you're doing these patterns, folks. You really are. They just don't work all the time. Tomorrow I'm going to really focus some on one of the best traders that we had down at the Chicago Mercantile Exchange. He had some great ideas for trading. Harry Mikas, he passed away many years ago, but he's got some really good ideas on trading and mapping your strategies. And I'm going to cover some of that tomorrow, because I know you get tired of just watching the patterns and the numbers. That gets boring as heck. And you want to talk a little bit more what trading is all about, and that's preparation and the things that are really important, and that's money management and the mental part of trading. So we need to focus on those, quite a bit also. So that's a major thing that is very, very important here. Okay, we've held the low so far in the Dow Jones here at that 24,500. If we break below that, that would be sort of negative, because It didn't rally much, but we'll have to see if that's going to be the case. Not too much. And the gold, if we get below that 1287 level, that's $7 from where it is. At most, really high probability we're going to get down to that somewhere between 1260 or 1240 and maybe even 1200, because 1200 is the long-term 61% retracement in gold, and that is equivalent to 1510 in the silver. 1510 in silver is Christmas Day, folks. We'll have a special report on that one if we get down there in silver, because that's got a lot of numbers in that area. So we're going to take a little break. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and tomorrow I'm going to go over some really great rules that Harry brought to my attention. He had these little cards that he passed out to new traders that came down. And when he came to me, he knew who I was because I had done so much business through Drexel Burnham in the hogs and in bellies and cattle. And he handed me the card. He said, "Here, you probably won't need this." And I said, "Could I have two?" I said, "I probably need a double." And I was right. Anyway, he's a great guy, but he really had some fun things to say, about the markets. And his main thing was risk control. He was really risk averse, but he had one great tribute that was like no other trader that I've ever met, and that was he was able to reverse. In other words, if he was long and he saw that he was wrong, he would go the other way just faster than, an alligator moving through the swamp. I'll tell you, he was really good at that. So more power to him. Anyway, we'll cover some of these rules tomorrow because I think you'll enjoy them. It's really a good thing to review some of the things that the old timers had to say because they were very smart and they survived all these years. And I think he traded on the floor for well over 40 years, and I don't think he ever had a losing year. And but anyway, we'll go over some of these things, and I think you'll enjoy them. So pay attention, folks. We got a lot of patterns up here. If we close really badly today in the Dow down more than 300, that would really be negative considering all the red that we have everywhere. But the key is the fact that this high-grade bond market gapped down so much. This could really be a very negative long-term and have really bad ramifications. So let's keep an eye on that. We'll be watching that tomorrow. I'll be updating that just to see if there's any more information coming from it. So that's an important thing to do. I think we're coming up to our time now, so live every day in an attitude of gratitude, and may God bless, and I'll see you tomorrow. And hopefully we're going to have Rich Anderson as our guest tomorrow. He couldn't do it today because he has a lot of tigers in the pit today, but maybe we'll have him on tomorrow. 877-927-6648.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.